Good afternoon and welcome to GrainTV. It's August 17, 2012. I'm Logan Burgess. To my right is Cody Bills. So Cody, let's hop into Fire Tip here and see how the grains are trading on a Friday afternoon. We're looking at old crop corn trading up 2.5, new crop corn picking up 1.5 cents here. We're looking at old crop beans up 12 1/4. That new crop contract actually the leader to the upside here today, trading up 17 3/4 on the heels of yesterday's selling. If we take a look at wheat in Chicago, we're trading up 14 1/4. Kansas City wheat trading up 13 here. You know, kind of a quiet day in the grain complex and in the outside markets here. One thing that is supporting the soybean market in particular right now is a revised 6 to 10 day outlook. Right now, if you take a look at map provided by our friends over at Planalytics, as you can see, temperature should be very conducive to getting some good yields out of the soybean crop. But the one thing is that we're not going to be getting the precipitation that the trade's really been looking for. I think as a result, we see specifically that November soybean contract trading up here 18 right now, 18 cents higher. Right now, we're looking at about 85% of this crop in the pod setting stage. So it's a very important stage of development for determining yields out of this crop. As a result, the soybean complex in particular is really going to be focused on weather here moving forward. Kind of a quiet day though in general. You know, not a lot to talk about in the futures market. So we took a look at the cash market. What do you find there, Cody?
Yeah, well, let's take a look at the average cash, or the average basis across the U.S. for corn. You'll notice that we did improve 3 cents. Ethanol facilities improved 4.9 cents. River terminals actually declined again. You notice here this chart, I just wanted to kind of show you how ethanol and river facilities on average have been performing and the trends that we've been observing. Here you'll notice ethanol in the spot month actually has been trending higher. You know, if you look at the river facilities, which is this red here, that's been trending lower here, and I think that it is kind of interesting, especially when you look at the forward curve. You'll notice this isn't history. This is today, and what we're observing here is, notice we have spot down here, and then the forward month. So this is actually the forward curve. You'll notice that the river, that spot month, has been trending lower, and you'll notice it's at a discount to the ethanol facilities on average. But notice the difference as you move throughout that cash curve. You'll notice that the river then after harvest becomes the more competitive one, while ethanol starts to lose ground and doesn't have as competitive of a forward curve.
Oh, that's really interesting here, Cody. So if you're a producer that has exposure to an ethanol and a river market in their area there, it might be prudent to take a look at the ethanol facilities, specifically if you're selling in the spot market. Yeah. What's kind of the causality of, well, why are we seeing this reversal here, seeing the river actually bidding a premium over ethanol across the forward curve?
Well, there's two reasons. When you look at the ethanol curves, it looks as though, I mean, they know they can lock in those margins right now in spot, and that's why they're bidding slightly stronger than river in the spot. However, when you get down that forward curve, it gets a little bit less certain. You know,
right.
They're not certain whether or not they will be able to lock in those profitable margins, and so that's why you see them back off in their competitiveness.
Mm-hmm.
Now, that means I think that the spot bid will most likely stay strong, but in general that forward curve is going to be a weaker. So you don't necessarily want a forward contract with ethanol facilities on average. Now, the one thing that you could look at here is river. River right now, old crop sales in the export sales, that has been very, very weak. You know, we've seen export sales dry up. I think that once harvest comes online, they need to meet some of the obligations here, some of the commitments that they've booked earlier on this year, and I think that's why we're seeing some of the strength in the forward part of the curve for river facilities.
Certainly. What's this red line here bidding $8.60 cash price?
Well, okay, so this is the best bid that I've observed in the grain belt.
Okay.
So what we're looking at is some of the best bids up here, and notice the difference between the average river, the average ethanol, and the best bids out there. It's almost 50, 60 cents, 70 cents between the best and the average, and this just outlines and it just accentuates the fact that you have to pay attention to these premium locations. You have to be able to identify them. And they may not necessarily be right down the road from you. They may not be in the typical markets that you sell to.
Right.
So you have to open up your view of the cash market. You need to be able to view basis and bids within at least a 200-mile radius of your farm, because these are real trucking opportunities that farmers can actually take advantage of.
Right, certainly. Well, we have a great cash marketing platform here. If you want to take a look at it and get help finding those premium markets in your area, give us a call, and Cody would be happy to walk you through a demo of that platform there. I think that kind of wraps up our show here for Friday afternoon on GrainTV. Thanks a lot for joining us. Have a great weekend. We'll see you back here Monday.
Take care.